Stick around for this episode. We're going to do our monthly update for April, and we're going to dig into the budget, how it affects you, how it affects your insurance contracts and your finances, and all the other updates we normally give you. Hi, everyone. Welcome to Control and Compound with Darren Mitchell. I'm your host, and joining me today is Christina Wyatt. Christina, how are you today?
Hey, Darren, I'm doing great. It's our April update, which means it's springtime. Hit spring. Doesn't look like it, but
Well, I was out this morning at 6 a.m. and it did not feel like spring. It felt like hard winter. But
it's on its
it's
way.
close. It's close. What I love about April is we can say we'll be golfing at the end of the month. We'll be golfing at the end of the month, and I'm like, that means like it's happening. I got my dock in the end of March, so I'm ready to go for the summer now.
Yeah, it might be frozen over again, but
Yeah, I know. Okay, so before we get started, Christina, we usually do your blurb on please like, subscribe, and all that stuff. And let's just have a chat. We want to thank our listeners. Our number of listeners and our subscribers have been increasing. We just want to say thank you. We really appreciate it, and we do have a lot of people listening that aren't subscribing, and we really would appreciate it if you could subscribe. I think that subscribe button, it just helps our algorithm, and then we're just able to share and help more people. So for those of you that are regular listeners that haven't subscribed, if you could do that, we'd really appreciate it. So we appreciate your time. Anything else, Christina, before we jump into this budget? You are fired up today for this.
the budget. Yes. Great budget. No, I think we got it covered there. Thank you for all of our subscribers. You covered that. Yeah, let's do this budget. Was you happy with these announcements? What are you thinking?
Well, I mean, it's nice to be, back to a balanced budget after a couple pandemic years, and now, we spent some money, but time to get our affairs in order, right? Financially.
Oh yeah, absolutely. I think we'll start with the things that didn't change. So let's talk about a couple positives before we get into the rest of it. So there was no tax rate increases, and there was no change to the capital gains exclusion. We like that. There's also no change to life insurance, so no change there. That's a big one for us. We like to hear that. So those are all our positives. I'll give you a nice negative though, or a big negative. We're just 1.18 trillion in federal debt now. Just 1.18 trillion, no biggie. There's going to be a higher than expected deficit this year. We're looking at 43 billion. So, not too much, but yeah, yeah.
And I want to talk to the debt and deficit and the games some politicians play, and so your debt is great. We owe this as a country 1.18 million. But your deficit is how much underwater you go into each year. It's like, wow, I owe a whack of money, 1.2 trillion. I got to really watch what I spend. And then they're going to spend $43 billion more than they bring in. And what some politicians have done with COVID is, yes, I understand government spending had to go up under COVID. But they would go, okay, now we had like $100 billion deficit under COVID. And now it's like, oh, we reduced the deficit by 60 billion. Not really. You just stopped spending all that pandemic money. You're still spending money like a drunken sailor. Like to say to someone like, hey, why don't we just print unlimited money, cause inflation, and then hey, we got a solution for you. And this is in the budget, that one-time GST payout for low income people. They call it a grocery rebate. So let's see. The government printed way too much money. It caused inflation. Inflation got out of hand. People couldn't afford to buy groceries. So the solution is, why don't we print more money and give it to the people to buy groceries? It's like a shopping addict that goes out and blows everything on their credit cards, spends way more money than they have. The credit card bill comes in. They're so depressed. The anxiety kicks in, and they go, I know what would make me feel better. I'll go shopping. And they go shopping and spend a bunch of more money. That's really what the government's doing here year after year. Is they don't have enough to pay last year's bills. They don't worry about that. They crank up more bills. So again, when we talk about what future tax rates are going to be, that's why you got to pay attention to these numbers, because I believe there's no way that taxes can't have to go up long term. If we can't even forget about paying our debt. We can't even bounce our books for 1 year, not even close. And there's not even a target to bounce the books in the future. So Anyway, that's my rant on that. Printing money to solve the problem of we printed too much money doesn't sound like a good idea to me.
Yeah, so that's how they're solving our inflation at the grocery store. Next solution on the board is our solution for the housing crisis, right? How are we going to fix the housing and the affordability? Well, they announced this one last year, the TFSA for home buyers, but it's rolling out this year. So people can start investing in these in April 2023, so this month. And the solution here is you can take $8,000 up to a maximum of $40,000 each year, earning eight. You can add $8,000 to these. It is going to grow tax-free, and it is going to be looked at as tax deductible from an RSP side of things. So it's not bad. Don't get me wrong. It is nice for first-time home buyers to have this little addition. But it is certainly not going to fix the housing crisis. Like, I don't know what property you're buying in Ontario or in the GTA with an $8,000, even $40,000 deposit at this point, right? Not going to fix the affordability or the, just not having them there, because even if you got this cash put to the side, if there's no house for you to buy, I don't know how that's going to, fix the problem. But I guess
so. It's 8,000. Is it 8,000 per year to a max of 40?
Yeah, so 40,000 lifetime, and they're going to give you 8,000 a year that you can add to it each year, up to that 40,000. If you don't get the 8,000 in, I believe you can top it up the following year, so you can make up. It will accumulate for you so that you can get to that 40,000, and it's going to grow tax free for you, and it is going to be tax deductible like the RSP. So it's going to work like the RSP home buyers plan on that side, but it's going to grow tax free inside as well. So it's another spot that you can definitely save in.
So that's not bad. So if you're gonna buy like the average house one GTA over $1 million, so $1 million home, you need $200,000 down, and you can put 8,000 towards the 200,000 you'd need for your house into this vehicle. So how many years would it take that 8,000 to grow to two? Well, anyway, you know where I'm going with this.
It's a nice little. I get it. It can work for some people. It's a nice little thing to make us feel better. The GST rate, the grocery rebate, let's make us feel better, but is it going to fix the problem? Affordability and not having the houses available, I don't think that's what it's going to do, obviously. So.
Okay, and then there's some other tax notes. You may have heard this alternative minimum tax. What is this? We don't want to get into the alternative minimum tax. It's really tends to be for people when they're getting packages, when wealthy people are getting share options and bonuses and stuff, where they don't pay a lot of tax on this, and then the government's worried and they say, well, we got to subtract at least a minimum amount of tax. They've increased that. Talk to your accountant if it's going to apply to you. It's not going to apply to a lot of people. For the business owners, they really clamped down on this surplus stripping, where you were able to take company profits. If you think of 3 ways to earn income, $1 is going to be taxed at fully taxable or income. Then you got dividends going to be taxed at less than that, but more than capital gains. Capital gains would be the lowest taxed. So there's a strategy where some business owners could take their money, and instead of paying dividends, they could convert it to capital gains, surplus stripping. They clamped down on that. So again, that was a small window that's gone. And then, they made some changes to intergenerational business transfers that are a little more detailed, but no severe changes there. And then, Christina, a bunch of little ones on the RESP and stuff. What are those about?
Yeah, just a couple little ones. So for RESPs, it used to be that only one parent could own that policy. Now they're allowing separated parents, divorced parents, to have they can have joint plans so that they can both own it. For RDSP, so registered disability savings plans, before it had to be like your parent or guardian that owned these or helped with someone with disabilities with these. They're now allowing siblings to open these plans, so make it nice. And then another one was OFC, so the Office of the Superintendent for Insurance Financial Institutions. So the monitoring for financial institutions is now going to be monitoring crypto in banks and pensions. So that wasn't happening before. So we're going to start seeing that this year as well. And then we got like the dental care plan, where if you're making under 90,000 or so, they're going to give you a dental care plan. Now don't go to no, I'm not going to get started. Get started. I do think that we should focus on our healthcare first. I love a good set of teeth, but if you've got a broken arm, if you got issues in the hospital. I want that addressed first. That's all. But I guess, yeah, they got the dental plan rolling out too. Thanks for listening so far. If you're watching on YouTube, make sure you like, subscribe, and hit that bell button so you always know when new content is coming out. If you're listening on your favorite podcast platform, please leave a 5-star rating and leave a review and subscribe. And if you are interested in learning more, please visit our website at controlandcompound.com to sign up for a free education session with one of our wealth coaches.
Yeah, and you got to remember this dental plan, like, you know, it's going to be like fillings and cavities and cleanings and stuff. You're not getting braces on this. Emergency dental is covered under your health plan, so it's not like $5,000 and $10,000. It's the $120 expenses. And now we're going to have the federal government administering it. And, you know, I spent a lot of years on the group insurance side, and typically companies and employers aren't dumb. If the government will pay instead of them paying, they will let the government pay. So, you know, there was one province that announced that they would start covering beta-sarin for MS drugs, I remember a few years ago. And they said, we'll cover MS drugs. And they said, it's no big deal. Like, there's only, you know, X amount of people that need it that aren't covered by an insurance plan through their employer. Well, what happened? Instantly, when the government announced that, all the insurers went out and said, we no longer cover beta-sarin for these group insurance health plans. And then what happened? Oh, so the government now had to pick that cost up for everyone in that province because the insurance company and the employers changed their contract. So if we see this with the dental, I don't know, it may be a little tougher with the limit on income, but I think you're going to see some lower priced or lower income industries, maybe like a daycare or something where not a lot of employees are going to be making more than 90,000. Now it's a free-for-all for the employer to come in and say, oh, we don't need to offer you a dental plan anymore. We'll let the government pay for that. And when the government pays for it, it's tax dollars. So now we're letting the employer off the hook. So we'll see how that develops. But typically, if the government's going to pay for something, insurance companies and businesses will find a way for the government to pay that for them too. So we'll see where it goes. And again, you're not losing your house over a filling.
No, that's true.
But
and it's not, I'm not against dental. I'm not against good teeth, but I do want a family doctor as well. So I don't know. One of those.
Fix the waiting list for family doctors might be a better priority, but it's not all doom and gloom, because there was one part of the budget that was huge, especially for you, Christina. I know it was one of your big concerns. A couple weeks before the budget, they announced an increase in the alcohol tax, including wine. Yes, I'm looking at you, of 6.3%. And there's a huge uproar, Canadians going, you can't increase our alcohol 6.3%. So when the budget came out, they actually lowered it to 2%. So alcohol is only going up 2%. And then on top of the budget too, well, we got a carbon tax increase April 1st too. So we do have a carbon tax, but your liquor's only 2% cheaper. So you can feel better about the increased taxes every time you get gas now, and every time you buy another good and service anywhere that has to use gas to deliver that product to you. So at least your liquor's only up 2%. That's the huge win. Take the win.
Got to take the win. You got to take the win with the wine.
All right, anything else in the budget before we get into the other updates?
No, I think we covered most of, there's definitely other things going on, but we covered most of the things that would kind of apply to our industry anyways.
Cool. Well, speaking of industry, nice segue. Speaking of industry, just wanted to give you an industry update in the insurance business. How much money do these companies make? It's this time of year where we get all the earnings from 2022 and we see how much the insurance companies make. We just thought some listeners be curious. So Equitable last year made 150 million in change, so 156. Sun Life made about $3 billion last year. Pretty good year. Great-West Life, which would be Canada Life from the insurance side, they made $3.2 billion last year. And Manulife earnings were up to $7.3 billion. So, and in the Canadian market for Manulife, their Canadian profit was actually up 15%. So again, this is for shareholders on this Manulife and Sun and I'm talking about, but just for your information, this is what those companies are making: strong, solid, consistent returns forever and ever and ever. And those are the companies we're trusting with their money. Okay, Christina, that's the industry update. What about inflation in the markets? What's going on there?
Yeah. So, inflation for this year in Canada, it's going down. So we're at 5.2% in February. It was 5.9% in January. And that was probably reflected in those interest rates remaining the same. When we heard that update recently, our interest rates held. So they're looking at, we're starting to see the impacts of those interest rates going up last year, right? It takes between 12 and 24 months. And it would have been right around this time last year when we started seeing those interest rates go up. So this is combating inflation to some degree, and they're seeing it happen, which is nice. They're holding the rate, so that's good. So that's an update there. Stock market, it's kind of doing the same thing it has been since the beginning of the year. The S&P 500's up 5.96%. The TSX up 2.87%. We're not seeing a huge comeback like we sometimes do, after a big downturn in the market, but that recession word is still out there looming, right? And when people are uncertain, they're not big on depositing big amounts into volatility, and I don't blame them, really. So markets kind of the same. Bitcoin's 27,000 right now, so that's up from where it was, but we're not seeing significant changes since our last update. And the Canadian dollar sitting around 74 cents, so no big changes there.
Not a lot of massive changes in all those updates. It's bouncing around a little bit. I mean, is it going to continue like that? Who knows? Or is this the calm because we're in the eye of the storm, right? This could be the calm before that recession, that huge decrease in the economy that a lot of people have been predicting or expecting. I don't know. Hopefully, we'll not see it, but I think the chances we're going to see a correction, a recession, are much higher than. Or it's more likely it's going to happen than not. So time will tell. We're not experts. We're not telling you what's going to happen. We're just telling you what we think. And then we had a great month for the podcast, and thanks for listeners. We really appreciate the feedback on what you want us to talk about too. We've taken that to heart. So we had some great podcasts. What did we have last month, Christina?
So recently, just last week, we put out our CPP and OAS, the Dirty Little Secrets episode, which is I've gotten some great feedback on that. A lot of information that people didn't know, right? Do you know how those government benefits work? If you don't, you definitely want to check out that podcast and take a listen. We also did one on universal life policies versus participating whole life policies for infinite banking. That is a regular question in my week. I hear it at least once a week. Can I use my universal life policy? So we really covered that from A to Z on if we can and we can't, sorry, spoiler alert, but listen to it so that you have an understanding of how that works. We had Cherry Chan on. That was awesome. That was a great podcast. The people that I've talked to since listening to that, she's amazing. She is really good. So if you didn't listen to that one, go back now and listen to that one immediately. And then we had
she's an accountant for she's an accountant for real estate investors. We should point out that's her
sorry.
Thing, and she's fantastic.
Well, you just listen. You just go back and listen to that one. It was a really good one. And then we had one on joint venture deals as well. So just continuing our real estate series where we went into how you can apply your infinite banking policy to joint ventures.
Cool. And then in the upcoming month in April, we got some great podcasts we're going to be launching too. We've got we're going to talk about the bank collapse and can it happen to your insurance company or your insurance policy. So that's going to be an important one not to miss. And then again, probably from listener feedback, we get a lot of requests. We're going to do one on infinite banking for business owners, how business owners can use it and implement it and how it works a little differently for them. And then we've got a private lending specialist coming on. We had some nice feedback when you and I talked about private lending, but we thought it'd be worthwhile to bring in a private lender, someone who's involved in private lending every single day, and pick their brain about what to look for and how to protect yourself and what to avoid and whether it's a good idea. So great podcast last month, great coming up. Thanks again for those that are going to hit that subscribe button. We appreciate it. We appreciate all you listeners. Thanks for watching. Thanks for listening. Take care.
Thanks for listening to this podcast. If you're listening on YouTube, please like, subscribe, and hit that bell button. If you're listening on your favorite podcast platform, please leave us a 5-star review and subscribe. And if you want more information, check out our website, controllandcompound.com, and you can sign up for an education session with one of our wealth coaches.